So let's continue the working papers. So there are two types of audit working papers. Number one is standardized audit working papers. Then number two, automated audit working papers. So we begin with the standardized audit working papers. Standardized audit working papers. Standardized audit working papers. Standardized audit working papers. The standardized audit working papers. Then we write the following. We write the following. These are audit working papers. These are audit working papers. These are audit working papers. These are audit working papers that are prepared. That are prepared. That are prepared and pre-printed and pre-printed and pre-printed by the audit firm, by the audit firm, so as to ensure that, e.g., they are not prepared during the audit fieldwork, they are made to serve the needs of all the clients, irrespective of the size of the client's business, So we have examples of such kind of standardized working papers, like e.g., standardized audit program, e.g., standardized audit program. We also have standardized bank letters, We can also have standardized questionnaires, etc. Standardized questionnaires, etc. Let's go to the advantages of standardized audit working papers. 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 Point number one, they enhance efficiency. They enhance efficiency of the audit work. They enhance efficiency of the audit work, since the audit team members get used to them. The number two, they provide guidelines and instructions. They provide guidelines and instructions to junior audit staff. They provide guidelines and instructions to junior auditor staff. The number 3, they provide a means. They provide a means of controlling the audit work. They provide a means of controlling the audit work. They provide a means of controlling the audit work. And next point, they save on audit time. They save on audit time. They save on audit time. Since they are prepared in advance. 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 Number 5, they enhance uniformity of audit work. They enhance uniformity of audit work. They enhance uniformity of auditor work. Let's go to the limitations. Limitations of standardized audit working papers. Limitations of standardized audit working papers. Limitations of standardized audit working papers. Limitations of the standardized audit working papers. Point number 1, they can make an audit. They can make an audit to become too mechanical. They can make an audit to become too mechanical. They can make an audit to become too mechanical. Is people just follow the procedures without questioning. Even if the circumstances have changed, the auditor staff will not be able to modify the programs to fit the changing circumstances. And that one also inhibits their creativity and innovation during the process of conducting the audit. Number 2, they discourage creativity. They discourage creativity. They discourage creativity. Sometimes it's very good if people can be initiative, taking an action, as long as they're doing the right thing. But since they're using the standardized auditor program, where the procedures have already been predetermined in advance what they're supposed to be doing, they may not have a second, I think, or to think outside the box on how they can do work better. Number 3, they lack flexibility in case of changes. They lack flexibility in case of changes. They lack flexibility in case of changes in the client's operations. They lack flexibility in case of changes in the client's operations. They lack flexibility in case of changes in the client's operations. So let's go to number 2, automated audit working papers. Automated audit working papers. Automated audit working papers. Automated audit working papers. So these are those documentation which are prepared electronically. You prepare them, use the computer system. For that case, there is a computer program for preparing such kind of auditor documentation. It also depends which I have a bad flu. So it all depends with which application the auditor will adopt. For a number of applications, which auditors can adopt. So already follow that they are working papers. They are working papers. They are working papers that are maintained. That are maintained. That are maintained and produced electronically. And producer electronically. And producer electronically. And producer electronically. They are maintained in a soft copy. They are maintained in a soft copy. They are maintained in a soft copy. and thus are used to audit clients, and thus are used to audit clients, and thus are used to audit clients with the computerized accounting system, with the computerized accounting system, with the computerized accounting system. Then we go to the advantages. So what are the advantages of using such kind of working papers? I know this is an area that we can't fail when it comes to the IT part of it, the computer system. So now these are the benefits of using automated working papers. An obvious point, which will always come, like in terms of the cost, they are cheaper as compared to the physical paper storage media. Another one, they can easily be transferable. That means they can also allow remote working. So they ensure auditors are able to have a flexible working arrangements. Ingine pia they're also very secure because computers are running the password. And that means probably the only person who can access the working papers is somebody who has got an access to the username and also the password. So for purposes of confidentiality, they are better to protect that one because of the use of the passwords. They also allow people to share data across the network. Allow people, they can also be accessed anywhere. As long as you are connected to the system, you can access your data and continue with your work. Then people are part of Kwamba, there are some softwares that are user friendly to the auditor. Then also when it comes to maybe analysis of the data, auditor is able to analyze a larger data sample as compared with whenever they do it physically. So advantages, number one, they guarantee high level of accuracy. 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 Yes, computer, they're known to be more accurate. So in that case, utapata kwamba your documentation is a more accurate. Number two, they are more detailed and complete. 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 Number three, they encourage confidentiality. They encourage confidentiality. They encourage confidentiality due to the use of passwords. They encourage confidentiality due to the use of passwords. Due to the use of passwords. Number four, they are presentable. They are presentable. They are presentable. They are presentable. Five, they're easy to edit and update. 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 And let's go to limitations. 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 So the video for limitations of the automations, again, you can easily pick up the points. Like any system that's connected to the internet is vulnerable to a number of the information security threats, viruses, or the system to be hacked. It also requires auditor to have proficiency in the IT skills for them to be able to operate them. Also, the computer time will be needed. Another one is about the compatibility issues. The software by auditor anatomia, where the working papers sometimes may not be compatible with the client software, hence be a challenge to the auditors whenever they use automated working papers. So number one, they are expensive. They are expensive. They are expensive. They are expensive in terms of skills. In terms of skills required to prepare them. 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 Number two, They may be affected by computer virus. 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 Yes, virus can malicious program that get into contact with the computer system. They will destroy the files. Next, that they require a lot of computer time. 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 Number 4, they are only applicable. They are only applicable. They are only applicable to the clients. To the clients. They are only applicable to the clients who use computerized accounting systems. Who use computerized accounting systems. Who use computerized accounting systems. So let's go to techniques of gathering working papers. 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 The same as the methods of gathering working papers, from which are some of the methods that can be employed by the auditor to obtain or to gather the working papers. So number 1 is the photocopying. Photocopying clients' documents. Photocopying clients' documents. Photocopying clients' documents. Photocopying clients' documents. Number 2, taking notes on important areas. Taking notes on important areas. Taking notes on important areas of the client's business. Taking notes on the important areas of the client's business. Of the client's business. Number 3, interviewing client staff. Interviewing client staff. Interviewing client staff and maintaining a record. Interviewing client staff and maintaining a record. Interviewing client staff and maintaining a record. The number 4, auditors on judgment. Auditors on judgment. Put in writing. Auditors on judgment, put in writing. Auditors on judgment, put in writing. So that's all on what we can have on audit documentation. Now to do a guided by the ISA 230. Whenever it comes to maintenance of a sufficient audit documentation, which auditors have responsibility to do so. Na pia kuna the period hapa, kuna period hapa, where these documents should be complete. Kuna period whereby auditors working paper should be complete. Alafu pia kuna the period for the maintenance of those working papers. Security, maintenance of the working papers. Sasa, as from the balance sheet date, these working papers will be complete within 6 months. That's about it. You have to talk about the working papers are complete in all aspects. They have all the necessary features. If I come after 6 months, so you're now updating your working papers. Allow the maintenance of those working papers in a quick way, 5 years on the balance sheet date, 5 years from the balance sheet date, 5 years from the balance sheet date. Now, these are some of the regulations put in place, but the standard is 230. So we can end there on the working papers. So we look at the question, then we see the next subtopic. For the question that was pending, the question we can say that we are supposed to look at it today is a question on April 2022. Question number 3. April 2022, 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 question number 3. Question number 3. So in case those who are very new in this class, hatujenda mbali sana, we are still in topic 4, management of auditor practice, which focuses in getting the auditor right, ensuring that auditors are able to produce the quality audit work. So there are certain things there which they need to adhere, which is a part of our client acceptance, planning for the audit, and performing the auditor work. So we're just still discussing the topic of management of auditor practice. So let's look at that question. Your question, April 2022, question 3, part A of it. Equal part A of it. Yes. So it's a case study question. It's a case study question. It's a long story there. A case study can be based on a true information, or it can be a fictional story. Now, when there's a fictional story, the identity of the individual and the company is normally hidden. So sometimes students spend so much time for the case study information and may find answers as they go up. So what we normally need to do, just go straight to the question, try and look at now the context under which that question is being addressed. So we have now the case study there. The following information relates to Vitenge Supplies Limited. So number 1, at monthly intervals, the purchases ledger clerk of the company, Anna Mbole, lists the ledger balances. She then compares them with the file of suppliers statements. Those statements that agree with the list of the balances are extracted and placed in the file. Thus, those that do not agree with the listed balances are left in the original file. Number 2, Anna Mbole then prepares a list of the payments for all the suppliers who have been sent the statements as follows. 1, where the statement agrees with the balance, the statement is attached to the list. 2, where the statement disagrees with the balance, Anna Mbole computes around some amount, which is slightly less than the balance on the ledger, and enter this amount on the list of the payments. She then leaves the statement in the file. Then 3, the list of the payments then pass to Peter Dawa, the assistant accountant, who writes out the checks. The checks list and the statements are then sent to Lucia Kawa, the finance director, who signs them after checking against the statements where these are attached in the list of the balances. Then 4, the checks are then passed to the managing director, William Sinai, the other secretary who signs the checks and sends them back to Peter Dawa, who then posts them to the parties concerned. So 5, the auditors of the company have previously made comments regarding the poor quality of the accounting controls. So as a question is about the internal control system. He is testing whether the controls they are effective. There are no weaknesses that can cause some irregularities or the fraud to take place. So question number 1, isolate the areas which could have attracted adverse comments from the auditors. Then number 2, design a program for the substantive test, which will provide assurance that the check payments are not made improperly to creditors. So Simon, what are your story? So what do you do? Uh, no one is checking the work of Anambole. That means kwamba there is some form of lack of segregation of duties. So let's answer that question. Then it will now come out very clear. So two areas which would have attracted adverse comments from the auditors, areas which could have attracted adverse comments from the auditors. Areas which could have attracted adverse comments from the auditors include we read that Anambole appears to operate a questionable fashion in that she number one, she makes no attempts. She makes no attempts. In point one, she makes no attempts to reconcile. She makes no attempts to reconcile the purchases ledger account. She makes no attempts to reconcile the purchases ledger accounts. Okay, she does that one. Number 4 there. Kama did not agree, the listed balances are left in the original file. She's not making an attempt to do the reconciliation of the purchases ledger accounts, which is she's supposed to be doing, so that she's able to identify any errors or the fraud or some irregularities in the course of doing so. She doesn't do any reconciliation of the purchases ledger account. Number 2, she makes round sum payments. She makes round sum payments, which is likely to cause the accounts, balance to disagree, Yes, that one you can get kwa hiyo number 2, command 2, whereby Anambole computes around some amount, which is likely less than the balance on the ledger. So at the end of it, the ledger may not agree because there's some estimates she made on the balances. And next, she does not, sorry, you know, kuna somebody hapo. Okay. Okay, they do not attach invoices for payments. 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 Thus, there is no specific attempt. Thus, there is no specific attempt. Thus, there is no specific attempt to identify the transaction. To identify the transaction. To identify the transaction that are being settled, that are being settled, that are being settled, where the same invoice, could have been paid twice, where the same invoice could have been paid twice. Next is that there is lack of evidence. There is lack of evidence. There is lack of evidence for the first check signatory. There is lack of evidence for the first check signatory. Another is that William Sinai does not receive the supporting evidence for the payments. William Sinai does not receive the supporting evidence for payments. The supporting evidence for payments. Hence, he may not notice the errors. Hence, he may not notice the errors. Hence, he may not notice the errors. Next, there are no system to ensure. There are no system to ensure. There are no system to ensure. There are no system to ensure that all liabilities. That all liabilities in the creditor's ledger, are brought within the payment procedure system, are brought within the payment procedure systems, are brought within the payment procedure systems. Another is that it seems that Anambole does not claim. It seems that Anambole does not claim. See that Anambole does not claim cash discounts for early payments. Cash discounts for early payments. So, is there any that may match up? Because number one apple is a failure to reconcile the purchases ledger. Alafu hiyo number two is about the same to about you around some amount, your number two there. I love this guy, Peter Dawa, anaandika tu without any evidence, just write the check without evidence for the payments of the customers' balances, which is very dangerous. Alafu kuna story number 4 ya signatory. We were not told that the signatory, the identity is hidden there. His work is just to sign the checks, and it doesn't even call for the supporting what? Evidence. He can say to sign his checks and to forward back to Peter Dawa, who then post them to the parties what? Concerned. Yes, again, you see Peter Dawa But then it's the Peter Dow who is supposed to post the checks. So Bob is the one who initiated the writing of the checks. Is the same person who should be posting the checks? No, a different person. Another weakness up is that there should be separation. There should be separation of duties. There should be separation of duties between the persons who write the check. There should be separation of duties between the persons who write the check and the one who posts them to the relevant parties. And the one who posts them to the relevant parties. And the one who posts them to the relevant parties. And the one who posts them to the relevant parties. We also have another weakness example. Check recorded in the checkbook register. You're not being told. Yes, suppose they just are sending them, but there's no record maintained for the check dispatched. No records maintained for the check dispatched. No records maintained for the checks dispatched. No records maintained for the checks dispatched to the concerned parties. To the concerned parties. Anything else? Is we shall assume kwamba hizo supplier statements they are pre-numbered, so that's automatic. We will assume kwamba they have been what? Pre-numbered. Now, if they have been pre-numbered, why a list of them and they don't compare with the supplier details? She then compares them with the file of the suppliers statements. Those statements that agree with the list of the balances are extracted and placed in the file. Okay, there is a very poor tracking system of the supply statements, a poor tracking system, so poor tracing system, poor tracing systems for the suppliers statements, poor tracing systems for the suppliers statements. Poor tracing systems for the suppliers statements. They need to have a very clear system where those statements or suppliers and the balances should automatically agree. At least we've been able to identify some of the comments there that could have been raised by the auditors. So let's go to number 2, design a program for the substantive test, which will provide reassurance that the check payments are not made improperly to creditors. We want you now to design some of the procedures that will show that the checks are not made to the wrong persons. So let's have the substantive test, the substantive test, which can be performed. So one is circularize the suppliers, circularize the suppliers, circularize the suppliers, circularize the suppliers, in bracket creditors for their balances, regularize the suppliers, so creditors for their balances by selecting the round sum payments, by selecting the round sum payments, credit balances, and debit balances, and debit balances, and debit balances. And next, inspect the accounts or balances. Inspect the accounts or balances that do not agree. Inspect the accounts or balances that do not agree. Inspect the accounts or balances that do not agree. Next, inspect the statements and the vouchers. Inspect the statements and vouchers. Inspect the statements and vouchers. In order to determine the accuracy, of the ledger accounts, of the ledger accounts. The other one, perform cut-off procedures. Perform cut-off procedures. Perform cut-off procedures. Perform cut-off procedures on the purchases transactions, on the purchases transactions and payments, on the purchases transaction and payments, on the purchases transaction and payments, to confirm whether they have been recorded, in the correct accounting period. In the correct accounting period. Next, review the significant ratios. Review the significant ratios. Review the significant ratios. E.g. current ratio. E.g. current ratio. And investigate any unusual occurrence. And investigate any unusual occurrence. And investigate any unusual occurrence. Next, no check should be prepared. No check should be prepared. No check should be prepared without the necessary supporting documents. No check should be prepared without any supporting documents. Next, the system of check preparing. The system of preparing checks. The systems of preparing checks needs to be supervised. Needs to be supervised. The system of preparing checks needs to be supervised by an independent person. By an independent person. By an independent person. And a periodic bank reconciliation done. And a periodic bank reconciliation done. Next, the check signatory authority should be in writing. The check signatory authority should be in writing. The check signatory authority should be in writing. The check signatory authority should be in writing and be exercised for the interest of the company, and be exercised for the interest of the company. Another is that all cancelled checks for payments, all cancelled checks for payment should be stamped. All cancelled checks for payments should be stamped. To minimize the chance of fraud. To minimize the chance of a fraud. Next, unused checkbook should be kept under key and lock. Unused checkbook should be kept under key and lock. Unused checkbook should be kept under key and lock. The other one, avoid keeping open checks. Avoid keeping open checks. Avoid keeping open checks. Avoid keeping open checks. So hapo tunaweza endelea. There are so many of them. We shall come and interact with them for the internal control system, as we understand some of the control measures which needs to be put in place for the purposes of safeguarding the entities' assets. So nataka tuangalie question nyingine ya December 2021 final paper. December 2021 final paper. December 2021 final paper. December 2021 final paper. Question number 2. 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 So your firm has recently been appointed the statutory auditor of Malimengi Limited, a large software drinks company in your country, for the year ended 31st December 2021. The previous auditors from whom your firm have received professional clearance do not wish to be reappointed as auditors. The principal activities of the company are the distribution and the retail of the soft drinks. All products are imported from the suppliers based in the USA and delivered to Mombasa Central Warehouse. The company has its own retail outlets, but also supplies national supermarket chains and small independent retailers. Additional information on the company's operation: 1, sales through its own retail outlets are on a cash basis, and sales to supermarkets and independent retailers are on creditor basis. Number 2, inventory records management. The company maintains computerized inventory records for inventory sold at the distribution center and the retail outlets. Each sale is recorded and the computer updates the quantity sold and the inventory balance. The manager at each outlet is responsible for the banking, the takings on a daily basis. Website development. During the year, the company engaged consultants to design and implement the company's name website with online ordering facilities. 4, targeted launch date. Under the terms of the contract, the website was scheduled to be operational by the end of October 2021 in order to take advantages of the high seasonal demand at this time of the year. 5, failure to launch and legal suit. Due to technical problems, the website was not launched until the end of December 2021. The consultants have been paid in full for their work. However, the company has commenced legal proceedings for the breach of contract. 6. Increased revenue in presented management accounts. Despite failing to meet its revenue targets in respect of online revenue, the management account for the 12 months to 31st December 2021 indicate an increase in revenue of 30% compared with the same period in 2020. 7. Stocks and receivables. Stocks and receivables balances are significantly higher than the previous year as a result of the increased level of activity. 8. Proposed expansion. Management is planning to expand the retail activities of the business by opening additional retail outlets in Uganda, Tanzania, and Ethiopia. 9. Funding of expansion. It's hoping to fund the expansion with a bank loan and support the company's banker to provide the funding. The banks are required to audited financial statements before making a decision. Management is keen to have the funding in place to progress with the expansion and would like to have the audit completed by 31st December 2021. So required, identify from the circumstances described above the key business risk for each risk. A, list the factors which have led you to identify that risk. Then B, outline the audit work you will perform to address the risk. So 10 marks, 10 marks. So list the factors which have led you to identify that risk. So what we will do as a good student, we do on business risk. We have business risk. This is what we need to do first. Took on the 3 components of the business risk. Kwanza tuko na financing risk, financing risk. Alafu ya pili tuko na operational risk. Then the last one, number 4, tuko na what you call daily compliance risk. Then answer that question becomes so easy. That's what examiner wants you to identify. Because he's talking about business risk. The business risk is on 3 components. The kwanza, financing risk. Is it affect what? Financing what? Decision. Do you have a matter there affecting financing decision? I don't say unaware just automatically come to mind. Somewhere where they go to the bank and the bank is requesting for the audited financial statements. Operational risk usually in effect what we call the revenue generating activities. Revenue generating activities is never come maybe issue a supplier. There's a call withdrawal of a customer, a major customer. There's a high staff turnover of the key personnel in the company. This may be something affecting the demand of the company's products. Then we have compliance, this non-conformance to the laws and regulation, regulations. So now come and identify them from the case study. So the information provided. So if we start with the financing risk, are we able to identify the financing risk? The financing risk, they are well labeled there. Number 9, funding of what? Expansion. So there is an inability to obtain funding from the bank, 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 inability to obtain funding from the bank due to poor credit rating, due to poor credit rating. Yes, okay, you now maybe not that, but do you have anything about your suppliers there? Where they're making some purchases? Did you have anything about purchases? Anything in finance? Do you have any matter in finance there? Inventory records? So it's like you don't have any still any financing decisions, you don't have any other factor there. So let's go to operational risk, operational risk, operational risk. So hapo tunaweza kuona maybe withdrawal of major customers, withdrawal of major customers, withdrawal of major customers, withdrawal of major customers. We also have a failure to meet the revenue targets, which is point number 6. Failure to meet revenue targets. Failure to meet revenue targets. Failure to meet revenue targets. Hiyo number 2 hapo. Hapo pia kuna issue hapo, kuna risk hapo, hiyo number 2. Wanasema the manager at each outlet is responsible for banking the checkings on a daily basis. So there's a lack of supervision, lack of supervision on daily basis bankings, lack of supervision on daily basis banking, lack of supervision on daily basis banking. Kuna also your number 1, we about cash basis. Kuna cash there. So we may say sales through the its own retail outlets are on cash basis, and sales to supermarkets and whatever. So to tunaweza kuwa na cash theft due to lack of controls. Cash theft due to lack of controls. Cash theft due to lack of controls. So then you can go to compliance risk. Compliance risk. Compliance risk elements. Compliance risk elements. So tuko na hiyo story your failure to launch the website. Failure to launch the website. Failure to launch the website, leading to legal proceedings. Leading to legal proceedings. Leading to legal proceedings. Anything else in terms of the non-compliance? Yeah, so we can also talk of legal proceedings. There's a compensation, litigation compensation, litigation compensation. There's never know who will win that lawsuit. Yes.
New requirements as they enter new markets.
Yes. Oh, yes. New requirements as they enter new markets. 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 E.g. in the proposed expansion. E.g. in the proposed expansion. e.g. for the proposed expansion. At the same time, we also think about inability to obtain trading licenses for the new markets, inability to obtain trading licenses for the proposed markets, inability to obtain trading licenses for the proposed market, inability to obtain trading licenses for the proposed market. To number 7 here, we also mentioned in terms of operational activities, because we're being told the stocks and receivable balances are significantly higher than the previous year as a result of the increased level of what activities. So there you can say what can you say there's a risk? There's a possibility of incorrect stock valuation, 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 incorrect stock valuation. So let's now go to part B. Part B, outline the audit work will perform to address the risk. Outline the audit work will perform to address the risk. Outline the audit work will perform to address the risk. Outline the audit work will perform to address the risk. So what measures will you take to respond to the risk? So what will you do to respond to the risk? So one, to understand the entity and its environment, to understand or to obtain understanding of the entity and its environment, to obtain an understanding of the entity and its environment. Number 2, to understand the entity, level controls, to understand the entity level controls, to understand the entity level controls. Is kuna ile story ya risk assessment. You part of this risk assessment after you understand the client entity, you are taking risk assessment. The risk assessment kuna factors there that influence what we call inherent risk, inherent risk. These inherent risk factors are divided into 2 levels. What we call the transaction level. Transaction level factors. Then you have what you call the overall level, or the entity level. The entity level factors. The entity level factors. Allow people number 2, control risk. The control risk. The control risk. And lastly, the detection risk. The detection risk. The detection risk. So here number 2, we are understanding what you call the entity level controls. Entity level controls. Here's the upper. The entity level controls. For example, the level of the management integrity. Are they honest people? If they're not honest, that means there is a high possibility the financial statements to be materially misstated. Unaangalia pia the competency of the staff. Are they working under pressure? Is there understanding of the accounts departments? The number 3, understanding the transaction level controls. understanding the transaction level controls, understanding the transaction level controls, understanding the transaction level controls, understanding the transaction level controls. Sasa hiyo itakusaidia identify the transaction inherent risk and the transaction revenue, like the complexity of the accounts, complexity of the account sample, the related party transactions, if any, related party transaction, if any, etc. The number 4, use preliminary analytical procedures to identify risk. Use preliminary analytical procedures to identify the risk. Use a preliminary analytical procedures to identify risk. And next, perform fraud risk analysis. 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 The number 6, assessing the risk. 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 So hizo procedures, let's take one by one exam. The example tunaziweka na picha comprehensive manner. Let's say you just an example and want to look at how you can go about addressing the risk of the enterprise. So very first thing that you need to do as an auditor is what you call risk identity. Sorry, obtain understanding. You need to get that understanding of the entity, understanding of the entity. Understanding of the entity. Very first one, you understand the entity. You share what you do. The next one is be able to do what? Identify. Identify the risk. Identify the risk. After you identify the risk, you can do what you call risk assessment. Risk assessment. So risk assessment, you try to establish the most is likely to be suffered should those particular risk occur. How much can be suffered by the entity should the risk occur, and how extent are they likely to affect the entity, likely to affect the entity. The next slide, do what you call risk responses. Risk responses. Risk responses. So risk responses, you are designing now audit procedures. Design auditor procedures. Design auditor procedures. Auditor procedures to now respond to the risk that has the capability of detecting the risk. Design the audit procedures that have the capability of detecting the risk. The next is now perform risk assessment procedures. Perform risk assessment procedures. Perform risk assessment procedures. E.g., you can do inspection. You can be doing inspection of documents and records. You can be performing inquiry by seeking information here and there. You can be performing analytical review procedures. Analytical review procedures. Analytical review procedures. Then lastly, you can now make a conclusion. You can now conclude. You can now conclude on the risk assessment process. On the risk assessment process. Alternatively, that can also be another way on how you can answer that question. So as the questions examiner to test your knowledge, understanding of the subject matter. Examiner just want to ensure how you're able to put the relevant answers. Are you able to write the relevant answer? So the more theories we read, the more theories we do, which now expound our approach and answering these questions. So there's another question I want us to do. A very nice question is on August 2022. August 2022. August 2022. Question number 1. August 2022. Question number 1. That's the part A and B of it. August 2022. Question number 1. August 2022. Question number 1. August 2022, question number 1. August 2022, question number 1. August 2022, question number 1. So the question raised like this: the Basel core principles for effective banking supervision, risk management process requires that banks and banking groups must have comprehensive risk management process, including board and the senior management oversight to identify, evaluate, monitor, and control to mitigate all material risk and further to assess the overall capital adequacy in relation to the risk profile. In relation to the risk profile, so required with reference to the above statement, discuss 6 components of an effective risk management program for the banks and similar institutions from an auditor perspective. The number 2, describe the specific responsibility of the board in overseeing an institution's strategic risk management. So that's the unique question I found talk to Ure. Even if you're meeting that one for the very first time, you have now to think. Yes, kuna what you call the program there. There is a risk management, so effective risk management program. So you may think about what could be in that program. What could be contained in that program? It's a program which has been put in place to assist in the management of risk in the banks and similar institutions. So they just want to watch the components of effective risk management. Sasa, yes, you're managing risk. Still. Yes, first of all, you can't manage if you don't understand it. Still, you must be able to do what? Identify them. Identify them. You must also be able to tell the people the purposes, the purpose why you're doing so, the purpose why you have that policy. People must also be assigned responsibility. So who is going to do what? People must be assigned responsibilities. Who is going to do what whenever it comes to the management of the enterprise risk? So which are some of the components we will get in that program? So components. Which are some of the components we get in that program? Components. The components you get in that enterprise risk management program. The kwanza is a risk identification. Risk identification. Risk identification. Risk identification. Risk identification. Yes, so how do we identify the risk? Yes, these are my procedures on how to identify the risk. Will be there. The interested risk will be there. The interested risk areas will be also mentioned there. And number two components is the risk source. Risk source. Yes, we should identify all of these now risk. Unatect as a risk. So what's now the source of that? You must be able to tell now the cause. What's the cause of the risk? What's the cause of that particular identified risk? What's the cause of the identified risk? So that will be the second component, risk source. The risk source. The number 3 component will be risk measurement. Risk measurement. Risk measurement. Stroke evaluation. a risk measurement stroke evaluation. Yes, lazima tufanye the loss analysis by quantifying the risk. That means how much losses are we going to suffer? We must do what we call the loss analysis. Ask ourselves questions, how much loss are you going to suffer? Should that particular risk occur? How much loss are you going to suffer as an entity should that particular risk occur? Are we going to spend maybe 2 million to correct the situation? So that will also be included in that document. Next is a risk mitigation. Risk mitigation. Risk mitigation. So these are now measures now to respond to the risk. Measures for responding to the risk. So which strategies are you going to use to reduce the risk or to eliminate the risk? Which measures are you going to respond to the risk, either to reduce or eliminate the risk? Which measures are you going to use to reduce or eliminate the risk? There are a number of strategies that we can use, like one, we have what we call the risk acceptance. Risk acceptance. Risk of acceptance. You to have the risk transfer, or the sharing of the risk burden. Share the risk burden. You also have what we call the risk avoidance. Risk avoidance. Risk avoidance. Risk avoidance. Risk avoidance. Our next component would be the risk reporting and monitoring. 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 So we must have mechanisms on how the risk that has been identified are monitored. Are reported and continuous monitoring is so which are the mechanisms for reporting and which are the mechanisms put in place for monitoring the risk. Then the last component is upon the risk governance. Risk governance. Risk governance. The risk governance. So governance now the structure, a bio responsibility for the enterprise risk management. For the enterprise risk management, the governance structure. So after that point apply now what? The responsible parties are. The responsible parties, and their responsibilities towards the risk management. The responsible party and their responsibilities towards the enterprise risk management. Towards the enterprise risk management. Towards the enterprise risk management. Like utapata kwamba tuko na board of directors, you have the board of directors hapa. So board of directors tutakuwa na subcommittee, like one of them, enterprise risk management committee. They are all working just now to be focusing on the risk part. Sasa watakuwa napata hizo report, wana have a review for it before they give now the board for what? Approval. The work is to review the report of the risk management processes and after forward it to the board for approval. But if the also other parties there, other individuals maybe at the executive level, ambao the director is responsible to what? To the risk management. It's also one way that the board becomes accountable to the shareholders is through proper risk management. So that's one of the responsibilities of the board, risk management. And to show they are accountable to the owners. They are accountable to the shareholders by ensuring the entities are risk are open what? Managed. Yes, hakuna business ambayo haina risk. If any person doing a business with no risk, that's not what? A business. A business with no risk is a business with no return. So anything ambayo kuna risk, kuna nini? Return. Kama return iko high, that means the risk is also what? High. But still, what's very important is that you must be responsible enough to manage the risk. So your program, one of those identified components. And let's go to part B of it. Part B of it. So describe the specific responsibility of the board in overseeing and instituting describe the specific responsibilities of the board in overseeing and institutional strategic risk management. Describe the specific responsibilities of the board in overseeing and institutional strategic risk management. Strategic risk management. Sasa question kama hiyo hizi hata tungeandika is 8 marks. You need to struggle. Just think about yes, these boards have been given some roles to play, but they are all got a risk management. Now, if you come Janda, just think about in risk management process. In the risk management process. In other nini identification here. Either one of their own. Then you go to nini assessment. To form part of one of the responsibility. Then you go to the risk what responses. How you can advise on the risk responses what the strategies. Then you go to monitoring and review. You'll be at home part of the 8 marks. Whatever question in ngapi? Wajasema alikuwa discuss but in this case hapa tutaona once like 8 points. 8 points of the responsibilities. So one. Number 1. To carry out an assessment. To carry out an assessment. To carry out an assessment. To carry out an assessment of the company. To carry out an assessment of the company. To carry out an assessment of the company, emerging and principal risk. To carry out an assessment of the company, emerging and principal risk. And next is the principal risk. Principal risk. And next, to monitor the company risk. To monitor the company risk. To monitor the company risk and management. To monitor the company risk and management and internal control systems. And internal control systems. And internal control systems. And next, to review the annual risk management report. 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 And next, to review the risk management and internal control systems. To review the risk management and internal control systems. To review the risk management and internal control systems. To review the risk management and internal control systems. And next, to advise the board. To advise the board. To advise the board on the best risk management practices. On the best risk management practices to be adopted. On the best risk management practices to be adopted. On the best risk management practices to be adopted. And next, to confirm in the annual report. To confirm in the annual report. To confirm in the annual report. To confirm in the annual report that it has made that it has made risk assessments, and describe the principal risk, and describe the principal risk, and describe the principal risk, and the procedures, and the procedures, and the procedures that are in place, that are in place to identify the risk, that are in place to identify the risk, that are in place to identify the risk. Now let's take some few minutes break.
Maybe that's what he said. We have those in the past. We have yes.
Ndio maana nimekupigia masaa. Hata mnipatia mtu wa class. Siete kujaribu kwa ile niliweka jana ni kufunga once. Andianaleta ndio nisipigie kajekema nafika nisianze kumeona kuna siku kwa nilipotuna na mleche kule hakuna masomo kalenda mjirege ayone nilingo mlete fikia sina na kwa nikombe excel mbili ni para que como no no ni para que os como así que a ver ni moja hapo nimeona sijaandika nitaandika nimeona nikaandika Hello, amekuletea amekuletea ameleta ameleta. Hello. Oh, sawa sawa.
So our next subtopic. Our next subtopic is use and evaluation. Use and evaluation. Use and evaluation. Use and evaluation of internal control system. Use and evaluation. Use and evaluation of internal control system. Use and evaluation of internal control system by auditors, to address audit risk identified. To address audit risk identified. To address audit risk identified. Is use and evaluation of internal control system by auditors to address audit risk identified. Just things with the ICS was by the ISA 315, risk of material, the statement assessment, assessing of the risk of material, the statement, and understanding the client entity and its environment is a 315. Is a 315. So in this subtopic area, we shall be focusing on things that we need to know. Here we will define, be able to define what's an ICS, what's an internal control system. The other one is being able to tell objectives. Objectives are the purpose, or the importance of having a ICS, or the importance of having an ICS. The objectives or the purpose of having ICS. Then being able to know the elements of the effective internal control system. Elements of the effective internal control system. Being able to identify and discuss the various components of the internal control system. The various components of the internal control system. Then we shall be focusing on what we call respective responsibilities. Respective responsibilities of the management and auditor, of the management and auditor, Then to prepare the techniques of ascertaining, recording, and evaluating, the ICS, the techniques of ascertaining, recording, and evaluating the ICS. Then to do some examples of test of control, examples of test of controls, examples of test of controls. So those are the areas of function. So we can do that one on our next lesson on Saturday. We've done enough for today. So I'll answer up in our next lesson on Saturday.